Right. So let's get started. Maybe some people will connect in a minute, but we're about to get started. And if you are missing the beginning, you will see this, of course, in the recorded version later. So first of all, we will start with talking about a little bit about the basics. Of course, I have to do an introduction before going to some in detail stuff. If you have any questions or if you cannot hear me, if something is not clear, write in the chat. And as I was saying, I will start from the basics because you need to understand some basic stuff that maybe you know already, and maybe you will be here and you say, man, I know this stuff already, but don't worry, I will just cover quickly some basic stuff that later you will see why it is useful. Maybe you know it already, maybe you don't, but it will be useful. I know here we have some people that are beginners, we have some people that are advanced traders already, but this strategy is for both of you, whether you are either if you are a beginner or an advanced trader. So I need to start from some basics. I just collected some pictures, but don't worry, after showing you the pictures, I know that maybe you will think that, okay, I'm showing you the pictures because, and it's not the same as showing you the charts, but I will show you the pictures to show you how it is working theoretically, and then we will move here to the charts to show you some live examples of what happened in the past and what will happen during this week maybe. So first of all, this strategy is called supply and demand strategy because it is based on supply and demand. Of course, we will put some other factors that will help us build the confluence. And when I say confluence, I mean more things that add up in order to have a better accuracy. So you cannot only trade based on trend lines, you cannot trade only based on support and resistance, or maybe only on Fibonacci's, but you need some confluence. So this is a supply and demand strategy, but of course we will need to build confluence when entering a trade. You can be profitable, you can make money just by using supply and demand, but if you have confluence, your accuracy will be even better. When I say confluence, I mean mostly I mean Fibonacci levels. And the reason why Fibonacci levels are so useful is because I actually trade a lot with Fibonacci's, and when you have identified a direction of the market, you will probably see a pullback before continuing. If you know at which levels you want to enter, then you will be able to make some good profits. In this video, you are very lucky because I will also show you my Fibonacci levels and how I use them. Usually, I only teach that on my course, but since for the supply and demand strategy, we also need the Fibonacci's, then I will also show you the Fibonacci's. So you are actually getting two strategies inside one webinar. And these two strategies will work together. So sorry, by the way, I have everything written down here just to let you know if sometimes you see me read. It's not because I don't know the stuff, but it is because I want to cover every single point and not forget anything because you paid for this. And it is right that I'm telling you every single thing that you know, that you need to know, and that I'm not forgetting about anything. So if you see me read sometimes, it is because of that. So first of all, the benefits of trading with supply and demand, and I will also tell you what supply and demand means before starting. The benefits are, the first one is that you are going to be able to trade without many emotions. So I know a lot of traders can have a successful strategy. They say, okay, my strategy is working on my demo account, I'm making a lot of money, I have a high accuracy, always working, always getting profits. Then they go to live and they lose money. and they start asking themselves why they're losing money. They are recognizing that sometimes they are not able to actually control their emotions. When you are in a loss, you hold for a very long time. When you are in profit, you close too early, and all this stuff. We already know like the main problems about trading psychology and mindset. Of course, we will talk about mindset and psychology, or you can just ask me, since you're my student right now, you can ask me, I will give you some tips. But this strategy, this supply and demand strategy, will take emotions out of your trading because it is very systematic. It has some rules that you need to follow. And for this reason, I believe that it will be helpful for you. So you will be able to actually trade without putting too many emotions into the trades. After that, also this will be very useful because you will learn how the market actually works. Like sometimes maybe you have a successful strategy already, maybe you don't. If you don't, sometimes you don't understand why you're getting stopped out, why you're getting losses. Sometimes you see the trade that hits your stop loss just by maybe 1 pip or 5 pips and then goes to your direction, and you don't really understand why what you're doing wrong. And in this strategy, we will actually learn how the market works, how it moves. Another benefit is that we are actually understanding how the big banks are trading. When I say the big banks, I mean, as you know, banks have traders, financial institutions have traders, and they actually have one way of trading, and usually this way is supply and demand. And after, I will tell you the definition of supply and demand and why it works so much, why it works so good. I was saying we are understanding how the banks are trading. We are understanding the patterns that the banks are trading. So we are actually following the big boys of the market. We are able to follow their strategy and therefore to make profit with them. Just to take 1 second, this doesn't mean that we are not going to lose. So first of all, banks and financial institutions also have losing trades, of course. Other than that, we are not a bank's trader or a financial institution trader. They have many informations minutes, hours before we do. But we will be able to be profitable anyway because we will recognize the patterns that they are using. I just wanted to say that, of course, you cannot, after learning this strategy, the first thing that you don't have to do is to go all in your first trade, and maybe that will be a losing trade and you burn your account. That's what we don't want to do. We always have to use risk management because everybody uses risk management. The banks, they do use risk management because they also have losing trades. So for this reason, I will also dedicate like 10 or 20 minutes about risk management, but later I will show you how to place stop loss and take profits with this strategy on your charts. And also I will tell you which risk to reward you need to look at and how much you should risk per trade. I'm not going to stay here to do all the math, but I will give you some examples. Another good benefit is that, of course, if we are following the banks, we are going to stop to look at the market as retail traders, but we are actually going to trade like them. So that's really good. And of course, we're going to develop a winning mindset if we are trading the right way. I mean, sometimes all you need is some good mindset, and also it will not be as hard to develop one, since this trading strategy will take away a lot of indecision, a lot of problems with mindset and psychology of trading. So with that being said, this was the whole introduction. Sorry for taking a little bit long. We will move now to the examples that I say that I have on pictures, and I need to show you these examples. I know that some of this stuff is about some basics, but then we will move to charts. I will show you everything, how it works from A to Z. So let's start. First of all, we'll start with some basic candlesticks. If it loads, I don't know why it's taking some time. Thank you. I don't know why it's taking some time to actually open the picture. Oh, well. All right. So if it doesn't work, I will just show you everything directly on the charts, I guess. Just wanted to take a second to see if it did work. I'm not sure why it doesn't. Well, it is a problem if these are not going to load. So, I mean, if we are losing any minute, don't worry, I will extend the time of the supply and demand, of the supply and demand webinar. I need to restart the PC. That wasn't my plan since we started already, but thank you. I think it's not working. I don't know why. I opened all the pictures before starting. Open as Paint. I will try the last one. If not, we just move to the charts, I guess. Or I will need to restart everything, but I didn't want to do that actually. Yeah, I'll try to open as Paint. I'm sorry for the inconvenience. I tried to open all of these pictures before starting this webinar, and they were opening, but I guess they just decided not to work after we started. So open as Paint. Okay, thank you. Perfect. Perfect, thank you. Let's see. Oh, well, not really used to Paint, but okay. So I'm sorry, this is not the best, but still works. So first of all, we need to understand some candlestick patterns in order to look for our trades. And later I will tell you why it is so important, even though it is not that important every single time. I will actually teach you two ways of trading. One way is more risky, but with a better risk to reward ratio. And one way is less risky, but your risk to reward is also not as good. So candlestick patterns are very important for the second way if you want a less risky way of trading, but also with a smaller risk to reward ratio. By the way, thanks anybody who had me solve this issue. Not really why I wasn't opening the pictures, as I tried to open all of them before starting this class. Please scroll to Zoom. What do you mean? Sorry, what do you mean? Please scroll to Zoom. Oh, okay. Well, oh well, we will try this one. Right. Let me just check the chat. Okay, perfect. So, as I was saying, some of them are really important, some of them depending on which way you want to trade. In this case, my favorite candlestick pattern is the pin bar. The pin bar is very nice because it shows a clear rejection of an area. And when I see a pin bar, I don't wait for the other candle. So in this case, this one, if you're looking for sell, or this one, if you are looking for buy, I don't wait for that one because I mean you can miss out on many pips just by waiting. So it is a little bit more risky, but very good risk to reward ratio. I don't have the ID and the password for the webinar at the moment. Let me see. I don't think. You can just join through the link that I sent. We don't need the ID. So as I was saying, they are very important because they show a clear rejection. You can see that the price tries to go up right here. Price tries to go up to break above probably a support or resistance, but then after the boost tried to take control of the market, we actually pulled back down and the bears took control and we closed almost at the entry level. This shows that after boost tried to push the market up, the bears took control and push it back down. So the bears are in control right now. Vice versa on this one, the bears tried to push the market to the downside to break below support, to break below a trend line, but the boost took control of the market. We pushed back up and we were able to continue to the upside. In this case, these are my favorite patterns. Of course, there are some others which work really good. And let's give you some other examples. So let's open with paint again. So in this case, this is the engulfing. Sorry if you cannot see very well. This is the engulfing pattern. Still very good, shows a clear inversion, shows a clear control of either the bears or the bulls, but I mean, you're going to miss out on many pips if you are waiting for this candle. It works. I'm not saying that you shouldn't use it. I'm just telling you what I prefer. If you want to use it, I'm only showing you the candlestick patterns that I prefer. So the best for me are the tweezer tops or bottoms, the pin bars, and the engulfing. But if I can choose one, it is definitely the pin bar because you're not going to miss out on so many pips like if you are waiting for the engulfing candle. In this case, still a very good reversal sign, and I'm telling you because we're going to look for all these patterns when we are at supply and demand areas. Next one, it is the last one that I said that was my favorite, and it is the tweezer top or bottom. In this case, it is just like a pin bar, but two are created. So in this case, there is a double rejection of an area. In this case, double rejection of a demand. In this case, double rejection of a supply. and it is even stronger maybe than the pin bar. The reason why I chose the pin bar as my favorite is because I'm not going to wait for a second candle after I see a pin bar. So I would already enter at the first one right here or at the first one right here. As I said already, there are many candlestick patterns. As you can see, these are all candlestick patterns, but I only showed you the ones that I prefer. If you're going to look for all of these, I mean, your trading plan, and just in general is going to be crazy because you have too many things to look at. You need to have a specific trading plan, specific things that you're looking at. In this case, I definitely prefer the pin bar above everything. Okay, with that being said, you understood something about candlesticks. I'm sure that you know a lot already, but I wanted to share with you, for me, which is the top 3, but actually after the best, which are the pin bars. Wanted to take a second to tell you about supply and demand, what it is and why it works, before moving on to talk about market phases and market structure. So let me just close these things right here. Right. So everything is based on supply and demand. Like, for example, right now I didn't prepare this, but I will just give you some examples. The economy is based on supply and demand, like every single product that you see, the price is based on supply and demand. Like, if there is a big demand for apples or for oranges, then the price for oranges will be higher because everybody wants that thing. The same is that if there is no demand, so if no one is asking for oranges or apples, and there is a lot of supply, which means that a lot of people are giving out, they want to give out, they want to sell oranges or apples, then the price will be low because nobody wants it, everybody wants to sell it, and therefore, in order to sell it, they have to lower the price. So this is just some basics about supply and demand. And this applies to everything in the world. This applies to stocks, like a stock price goes up, goes down because of that. But the same thing is for currencies, so Forex. The banks are looking to trade supply and demand because they want to buy a lot when there is a demand area, because they know that when a currency is so low in price, it is attractive, and therefore they want to buy a lot. And they want to sell it at a supply area because that's an area where the price is overpriced. Less people want that currency, and therefore they're going to sell it. So if we are finally able to understand where supply and demand areas are, we're going to be able to trade with the banks. And in a minute, after covering market structure, we will dive into the supply and demand strategy, and you will understand why it works so good. As I said, I have some pictures ready, but also then we will see some examples. I didn't prepare anything on the chart, so we will see just live some examples. So candlesticks covered, market structure, we're going to talk about it right now. And later, I will also give you the rules that we need in order to trade this strategy. So let me close everything. All right. So market structure, and you will see in a minute why it is so important. All right. The market moves in phases. So it moves either to the upside, to the downside, so in a bullish market, bearish market, or in a range. Range means that it is going sideways. In this case, in order to understand if we are bullish or bearish, we need to look at the highs and at the lows of the chart. So in this case, we have a low right here, a high right here, and finally lower low, lower high, lower low, lower high. Therefore, a market formed by lower lows and lower highs is a bearish market. I know a lot of you know these things already, but trust me, it will be very important. Here, of course, we are sideways. I mean, you can just see it. We are inside a channel. Sometimes we're just in between support and resistance, and therefore the price is not. Well, is someone drawing? Like, because I didn't touch anything. Oh well. Or well, if anyone is drawing this, please can you remove it? I don't know how. Let me just see. Well, and as I was saying, the market, when it is bullish, it is made by higher highs and higher lows. Therefore, it is bullish. So please, if you are drawing, just delete this thing right here so I can continue. Thank you. And I will show you an example in the charts before moving to other examples. Can you please, like anyone who drew this thing? Oh well. Sorry, I just don't know who actually drew this thing and they're not taking it away. Yeah, I tried to remove it, but I can't really remove it. So I don't want to end this webinar and start another one just because of this reason. But if anyone can try to delete this thing because maybe someone did it and they don't know that they actually did it, then just go ahead and try. Maybe it is you and you don't even know that you just drew this thing. So please try to delete it right now so I can continue before actually ending the webinar and starting a new one. But that's not on my plan, so please. Yeah, I can disable interactions, but now I just did it 1 minute ago, but this one doesn't go away. I mean, it is already drawn, and so even if I disable the interactions, this remains in the chart. So let's just click in the link that I will send in the group in a minute and just connect back into the webinar, because we need to create a new one and I will disable interactions for everyone. Just didn't know that I was actually going to need to do this, but okay. We'll send the link in a minute. I mean 30 seconds.